Hello, traders. FS Collector here. Today is Wednesday, so happy hump day, and it is November 5th already. So, how is everybody doing today? As always, I do like to start off by looking at the US dollar index because anybody, in my opinion, that trades any of the dollar pairs except for gold and probably the dollar yen, I think that all six of these main dollar pairs really, you only really need to analyze the dollar index, and you can literally just trade in the direction that the dollar index tells you to trade in based on the dollar index. You can just trade all six of these dollar pairs. So I think it can really kind of simplify your trading a lot by, really trying to focus a lot on the US dollar index or the DXY. I always analyze the US dollar index because it is equally weighted, but there's very, very little difference between the DXY and the US dollar index. I mean, they are very, very, very similar patterns. I just much prefer the US dollar index because it is equally weighted across five or six US dollar pairs. The DXY is not equally weighted. It's 57% weighted to the euro dollar, which makes it look exactly the same as the euro dollar, but in reverse. If you actually overlap the euro dollar on top of the DXY and then invert the euro dollar, it's pretty much exactly the same chart as the euro dollar, which is why I think that when you're trying to trade, all six of these dollar pairs, using the dollar index is probably the best bet. If the euro dollar is kind of your main pair, and that's kind of the pair that you trade, then the DXY probably is a little bit better for you. Kind of gives you a little bit of a different perspective on the pattern, just seeing it upside down like that. Now, if you've been watching my videos, you know I actually think there's a very good chance that the dollar index is actually making a much more significant turn. I personally think that we potentially, and what's actually the DXY is a little bit clearer for this pattern, I will definitely admit. I think we potentially have three waves down on the weekly time frame for potentially a W. I think we potentially have three waves up for an X, and then I think this is like an A, which I think ends right here. And I think this is currently a B, which I think is going to take out the high of wave A. Then I think it's going to potentially go down for wave C to complete three waves of Y, probably pushing us down to at least a 78% Fibonacci retracement. Someplace around the $95 area is my target for this ABC of wave Y that I think we're currently in. Now, there is definitely a possibility. I mean, if you look at the US dollar index on the same time frame, the dollar index looks like it could just be a complete pattern. It went right to the 50% and made a double bottom, which is that 345 state that you always look for. It looks like it's about to break structure or it wants to break structure, which pretty much confirms this whole move down is complete. Also, the US dollar index looks more like a regular traditional ABC. It looks like five ways down, and then it looks like 1, 2, 3 up, 1, 2, 3 down, and then one up for like a flat pattern for the wave B. And then it just looks like a traditional downtrend for the wave C. 50% fib bounce, 78% Fibonacci extension, break a structure would pretty much confirm that this is potentially back into the uptrend. So there is definitely a chance that that is possible. I don't really think that that is what's going to happen, but it is definitely possible. Now, when I'm looking at the dollar pairs for correlation, I cannot help but notice this pound dollar on the weekly time frame. Now, yes, I do have the pound dollar labeled as an ABC, and I've been saying that it's an ABC for at least a couple weeks now, but we do have to realize that this may not be an ABC pullback. We have almost a perfect high, low, high, low, high, low, high, low, high with a break of structure right here. So we literally have like a perfect series of higher highs, higher lows with a break of structure. If this really is a wave C, then this is not a ABC right here, but it's actually a 1, a 2, and a 3. And this thing is just going to keep on going down on the weekly time frame. Yeah, we got UK interest rate tomorrow. That's kind of a good point since we're looking at the pound dollar. Um, I still have this labeled as an ABC, and I'm definitely not ruling out the possibility that it is still an ABC, like a flat pattern. The next big area of resistance for me is probably the 50% Fibonacci retracement, but we're also sitting at the 100% Fibonacci extension right now. But because of the US dollar index, I think we have a little bit more down. I think the dollar index potentially has a little bit more up. I think the dollar index needs to hit that 123 level. And also, if we hit this 123 level, the 123 extension, that is also going to put us above the high of the first three waves over here, which would be a nice liquidity grab for the market because, we would have the liquidity from this high, we would have the liquidity from this high. Then if it tries to make a turn to the downside, I would be more likely to say that that really is a significant turn. If it turns down today, I really wouldn't be inclined to say that this is a significant turn. It really looks like a 1, 2, 3. So even if it does try to turn down, it's probably just a 4 and a 5. It probably still is going to make its way up to the 123. And if we look at the pound dollar with that same idea in our heads, I think the pound dollar is a 1, and I think this is right here is like a running wave 2, and then this is right here is a wave 3. So even if the pound dollar does turn up, I think it's almost guaranteed a wave 4. Then we'll probably get another push down for wave 5. And if it bounces from the 50%, gives us a bigger structure, that should be the end of a pullback, and most likely the continuation of the uptrend. But like I said, this potentially could just keep on making lower lows, lower highs. But yeah, that's a good point that we have pound interest rate tomorrow. We had IMS service PMI today, which caused the dollar to gain a little bit of strength. It actually kind of slowed the dollar down. It was already kind of going up a little bit, but yeah. But we have President Trump talking in about an hour. Unfortunately, every time President Trump does a speech, I was thinking about, just running this live stream right through Donald Trump's speech, but he's always like 30, 40 minutes late on the speech. So if he starts at 6, that's an hour from now. He's always like 30 minutes late. So that means I would potentially have to be on a live stream for like 2.5 hours today, which I don't really want to do because I did like a 2-hour Zoom meeting yesterday with my members. But we have a Trump speech today, potentially in an hour to an hour and a half, depending on how late he wants to be. We also have somebody from Canada talking today, the Bank of Canada. So this is like the Power of Canada talking this afternoon or this evening, depending on where you are. Tomorrow we have interest rate for the pound, which they do not plan on lowering interest rates. They plan on keeping them at 4.0. So most likely they're probably not going to lower interest rates, but if they do lower them, that would potentially be a surprise to the market. And when the market does have some sort of a surprise is when you do get those big giant moves. Potentially, the Bailey speaks is potentially more likely to be a big mover tomorrow because if they don't change the interest rate, it's probably not going to be that big of a deal. But then when during the Bailey speech, the Bank of England governor Bailey, depending on what he says during his speech, that potentially is when the market is potentially going to make a bigger move. And then also tomorrow we got the Bank of Canada guy speaking again. We got Wallace speaking tomorrow, which is not a big deal. So he doesn't really. She's definitely not a market mover. Friday we got Canadian unemployment and employment change and unemployment rate. Definitely could move the CAD pairs a little bit. And then Friday we got non-farm payroll, but unfortunately the non-farm payroll news is not going to come out again if they do not open up the government. And maybe tonight Trump will talk about maybe plans to reopen the government, but I haven't heard anything about them working any kind of a deal out on the budget. So there's probably a better chance that they're not even going to work it out this week. There's probably a better chance that this is going to drag on for maybe a while. But we have consumer sentiment and we have inflation expectations tomorrow afternoon too. So this potentially is probably a bigger deal on Friday. So we have quite a bit of news coming out this week. Mostly the pound news is probably the highlight. Just looking ahead a little bit at next week. Next week is a little bit of a light news week. Tuesday is a holiday for Europe, Canada, and the U.S. It's just Veterans Day in the U.S., but it is definitely a bank holiday and a government holiday. We got CPI next week, but that may not come out if interest rates don't. If the government doesn't open up, that won't come out. We also have retail sales next week that will not come out if the government doesn't open up either. So yeah, pretty interesting, definitely. This U.S. government shutdown has been kind of an interesting ordeal, in my opinion. The markets now are trending pretty decent, but there was a couple of weeks there where the markets were pretty sideways over this government shutdown bull crap that was going on. But yeah, the main purpose of these live streams is kind of to interact with other people and to take requests from people in the chats. So if anybody does have something they want me to look at, I see the Coco wants me to look at the Aussie Kiwi. I'm sorry if I pronounced that incorrectly. I am terrible at pronunciation, which is probably why I'm having such a hard time learning Portuguese. But yeah, I'm terrible at pronunciation, so I do apologize for that. So, anyways, yeah, I can look at any of the dollar pairs anybody wants me to look at. I can look at basically anything. I can look at crypto. I can look at forex, commodities, stock market. Boy, the Aussie's turning pretty good today. That must be an Aussie move too. That's not even the dollar doing that. Oh wow, it is the Aussie doing it. Yeah, the Aussie's moving right now for some reason. Ooh, I was long on the Aussie Swiss. Is that still good? Yeah, that's still good. So if anybody is interested, I do offer a membership. And if anybody is interested in joining, it is only $30 a month. I do share every single trade I take with the group, but I'm really trying to get back into my swing trading. I really, really much prefer swing trading. It's so much less stressful. I am so much more consistent with my swing trading. I much prefer to enter maybe 3 to 5 trades a week. Maybe, 3 to 5 winning trades a week, maybe 1 or 2 losing trades a week. And that has always been what I've done. So if you do join my membership, just realize that I am not a short time frame trader. I never have been, and anytime I try to be, it usually ends in disaster. But every single trade I take, I share with the group. As you can see, I went long on the Aussie Swiss today. I stopped. My entry was at 0.52. This was shared with the group at the exact time of entry. So this is a trade that I took this morning. And then I'm also still long on the US dollar yen. I went long on the US dollar yen yesterday at 153.644. Yesterday at 6 p.m. UK time, London time. So, this is not a signal service, but I think that one of the best ways to learn how to trade is to try to learn and earn at the same time. So, hopefully, while you're learning by taking my trading course, following along in my live Zoom meetings, and participating in all, the chats and things like that, hopefully, you can try to earn a little bit of money at the same time while you're learning. That's kind of why I share my trades with the group. It's not because it's a signal service. I take 3 to 5 trades a week normally when I'm swing trading. I'm not like a short time frame trader, so just keep that in mind if you do join. But I'm long on the Aussie Swiss. We've been long on the Aussie Swiss all day, and I'm still long on the US dollar yen. I was trying to hold on to the 78% fib. I really feel like it needs to hit the 78% fib. So my take profit is actually a little bit above there. But if it gets to the 78% fib, I'll probably just take profit there and just call it good. But that was actually a very, very, very clear pullback right there. If you've been watching my videos on the US dollar yen, I didn't sort it. I kind of wish I had because I called this so perfectly. On one of my videos this week, I said it's probably going to go up and grab these highs, then it's probably going to go down and grab these lows, and then it's probably going to continue back up. And that's literally exactly what happened this week. I actually went long right here. I had to take a little bit of a heat last night when I was sleeping, but this all happened last night when I was sleeping, so it didn't even really bother me. I didn't even see it happen. Luckily, my stop loss was literally like 1 or 2 pips below where price actually went, but never got stopped out, so I stayed in it last night and still long on the US dollar yen, and I'm still long on the Aussie Swiss. Aussie Swiss turned out to be a really, really good trade. But yeah, I'm gonna start taking requests. So if you have any requests, put them in the chats. I'll be more than happy to look at anything. If anybody is interested in my membership, it is very, very cheap. It's only $30 a month. I'll put the link in the chats, but it's fxpipcollector.com. Pretty easy to remember. Aussie Kiwi. I'm expecting to see a turn on this at some point, but boy, it just never. It doesn't seem like it's gonna happen. It might not even happen, to tell you the truth. Boy, we're right at the previous high right now. I was hoping to sort this Aussie Swiss as a big swing trade, and if this was a really what it looks like, this is like a real swing trade right here. This is something you potentially would hold on to for like 3 months, maybe, and maybe even try to add a few times along the way if it really is going to do what it looks like it should do. Because if it really does turn, my target would be way the heck down here, and it would potentially take 2 or 3 months probably for it to get down there. And that's actually for me, those are the trades I love. I love to get in a trade and literally do nothing for like 2 weeks except for watch the profits roll in. I think that's the way to trade. Trading on those short time frames are so stressful and there's so many liquidity grabs and there's so much bull crap that it's so stressful in my opinion. And for me personally, I mean, I know a lot of really good scalpers. I know a lot of people that do make really good money trading short time frames. But for me personally, I am so much more consistent trading like the 4 hour, maybe 2 hour time frame, nothing below that. Way, way, way less stressful, way, way, way better work life environment. You can work and still have a life, children and a wife and all these type of things that potentially you would want to have. But anyways, long story short, on the Aussie Swiss weekly time frame, I still think this is potentially an A. Even though we're all the way back up to these highs, to me it still looks like a possible A B. Actually, now I mention that, let me look at this monthly chart right here. I just put these on here this week. Does it make sense for this to be an ABC on the monthly on this chart? It definitely does actually, because there's your A, B, C, then there's your first push down, now there's your Kretzen. It actually could even turn into a three like that actually. So it might not even be an ABC. It might actually be a 1, 2, 3. Hey Menu, how's it going, buddy? Been trading gold at all today? Gold's been kind of sideways for a while now, but I think it's starting to break out a little bit, isn't it? Yeah, not really. Anyways, I still think that potentially we could turn down at some point. On the daily time frame, if you zoom out a little bit, it definitely looks like we're in a wave five. I mean, it looks like a one, a two, a three, a four, and a five. So it definitely looks like it could be getting close to being over. Now, how do we identify the end of a trend? We identify the end of a trend by seeing a break of structure. Unfortunately, the break of structure is way down here. But if this is going to be just a traditional five-wave trend, which it looks like it potentially could be, then if we can identify the end of the wave five, which is this wave right here, then we should be able to identify the end of the whole move. And potentially, instead of waiting for this break of structure, maybe we could get in someplace around here and still end up, with a really, 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 really good entry. So we need to be on a time frame that we're seeing this move up as a trend. I wanted to move my structure up a little bit today. I guess I potentially could because that really does look like a pullback right there. Looks like a maybe a running pattern on maybe the 2 hour time frame, doesn't it? Yeah, it probably is. That's probably your A, B, C right there. It's a running. So maybe this is your 1, 2 over here, and then 3, 4. Anyways, long story short, we should potentially still be looking for longs, but I would be keeping a very close watch for a break of structure. As soon as we get a break of structure, I would be very, very, very aggressively looking for a pullback entry to get short. And if it really is what it looks like it is on the very high time phase, it could turn into a huge swing trade, like something that potentially could last a very long time. Boy, that move up is looking kind of corrective, isn't it? It kind of looks a little bit like it could be even like either a wave B or a wave two, doesn't it? Boy, if that breaks structure on the 30-minute time frame, you might want to go short. That could potentially be either an A or a 1. This could be either a B or a 2, and it could go down and either break structure for a 3, or it could go down and make a higher low if it's a wave C and then break back up. But if you're looking to trade this short term, this break of structure right here would likely be either the end of a B or the end of a 2. Uh, is it breaking? Let me check. I gotta check my charts here. I'm in a couple trades. On the 4 hour time frame, it really doesn't look like it's gonna reverse. At least the dollar yen does it, but boy, those yen pairs can reverse pretty aggressively sometimes, so we gotta be a little careful, don't we? Yeah, I don't know. I think I'm gonna hold. It really doesn't look like it's over on on like the 4 hour time frame. Oh, the Aussie Swiss really doesn't look like it's over either. It does. The problem is like the euro dollar really does look like it's due for a big pullback. It's been making a double bottom at the 100%. It looks like it wants to go up. If the euro dollar goes up, the dollar yen might push down pretty hard. And the pound dollar, same thing. The pound dollar really looks like it's due for a much bigger pullback. And we have almost a perfect five waves on the 1 hour time frame. And we have a break of structure on the 1 hour time frame. So we know that this wave from here to here is over. It could just end up being a pullback to those five waves and then going down again. But it does seem to me like it would make sense for the pound dollar and the euro dollar to go up. And the Aussie dollar is already pushing up mostly because of the Aussie. So if those go up, then the dollar yen could potentially go down. But boy, it seems like the dollar yen is more of a yen move today, not a dollar move. All the yen pairs to me look like they've ended a pullback. This looks like an ABC right here on the euro yen. It looks like it's going back up. The pound yen really looks like an ABC. I was actually almost entered this one, but I was already long the dollar yen. But this really looks like an ABC on the pound yen. It never did fill that gap all the way though, did it? No, it's still a little bit of an open gap right there. Oops. There's definitely still a little bit of a gap on this dollar, on this pound yen right here. You can see there's still a little bit of a gap right there that never did get filled. Did the gap fill on all the other yen pairs or what? Oh, whoops. I wanted to delete that line. That's what I was trying to do. There we go. Oh, the euro yen still has a big giant gap that never filled. Aussie yen gap filled. Kiwi yen gap filled. Canadian yen still has a pretty big gap. And the Swiss yen has a huge gap still. So kind of 50-50 on whether the gaps are actually, you know, I personally never trade based on gaps, and this right here is a really good example why. Because this thing was going down very hard, and I guarantee there were so many people trying to trade it down to these gaps. So many people were probably like, "Oh, I take profits down here at the bottom of the gap," and then what did it do? It just didn't even care. It just went back up. Now, the rule of thumb that I've heard from other people, this is not something I actually came up with myself. This is something that other people have talked about. Um, Most gaps do fill within 3 trading days, like 70 to 80% of the time, a gap will fill within 3 trading days. But if it doesn't fill within 3 trading days, it can take pretty much any amount of time that it wants to. There was a gap, actually, man, you showed me the gap. There was a gap on the DXY that filled um, I don't even know where it is anymore. I think it was over here someplace, but there was a gap someplace over here or something, someplace in this area that took like a year and a half to fill. So gaps do almost always fill, but how long is it going to take for it to fill? It could take a year for all we know. It could take pretty much an unlimited amount of time. But yeah, let's look at the pound yen. The pound yen gap hasn't filled yet either. It looks like it did, but it definitely didn't. There's still a little bit of an open gap right there. It really looks like the end of a cutscene, though. But I said the same thing the other day. It really looked like the end of a cutscene right there too. I was in one of my videos. I was like, "That looks like an ABC. It looks like it's going back up now." I didn't go long on it because I was already in some other trades. But yeah, that was a tricky little area right there because it definitely went up. It broke structure. At first, it looked like a pullback. It looked like 3 waves down, and then it went up and made 3 waves up, and then bam, just down it went very hard. So that was definitely a little bit of a bull trap right there. And I guess if you're just gonna base it on structure, the trend is definitely still down on the 4 hour time frame based on structure. The last structure is right here. So I guess based on structure, there is definitely a chance that this move up is a pullback to this move down. One thing I've kind of learned over the last year or two, Elliott Wave has always been my primary edge in the market, but I think structure, and when Menu says this a lot, I think structure is king. Elliott Wave is amazing because if you can correctly label the past, you can correctly predict the future. And there's almost no other ways to correctly, in my opinion, besides maybe some WD Gann stuff, which WD Gann is like one of the most hottest ways to trade in ever. But there's really no way other than Elliott Wave to correctly predict the future, in my opinion. But the problem is if you don't have the past labeled correctly, then your future forecast is not going to be correct either. And the problem I also have with Elliott Wave is that it's extremely discretionary. You could give this pound yen 4 hour time frame chart to 10 different Elliott Wave traders, and you would probably have 10 different Elliott Wave counts on this chart right here. One person would be like, oh, this is an ABC with a flat in the middle. Somebody else would be like, this is a WXY. Somebody else would be like, oh, this is an ABCDE. And like, it's just so discretionary. And in my opinion, that's the problem with Elliott Wave. Another big problem with Elliott Wave is um, at the end of the book, there's like 2 pages of rules that Elliott Wave supposedly can't break. Like a wave 4 is not supposed to overlap a wave 1, and like there's a whole bunch of rules according to the Elliott Wave book that are not supposed to break. And in my opinion, I've been studying Elliott Wave since basically 2009, 2010. And in my opinion, the market doesn't give a crap about Elliott Wave rules. It does whatever the heck it wants to do more times than not. I've seen wave fours overlap way into wave ones many times, especially when you're looking at a trend within a correction, because a correction is basically a trend and then a correction in the middle and then another trend. And I don't know how many times I've seen a wave four overlap a wave one when you're looking at a trend within a correction. It happens a lot. So if you're looking at a trend within a correction, like an ABC pullback, then it's actually very common for a wave 4 to overlap a wave 1. But according to the old Elliott wave book, that is a rule that should not be broken, and it shouldn't happen. Um, Philip, which is a really good trader, and I like the way he looks at stuff sometimes. He often says that when a five-wave pattern is overlapping, it's not an impulsive five waves. It's actually a WXY with a running in the middle. So this is like a WXY type thing, which I could kind of get on board with that. It's like a running wave, like a running ABC in the middle for the X, and then it makes a wave Y. So I could kind of get on board with that. I mean, he might be right about that, honestly. One of the reasons why I love, uh, being in the community of traders so much is because of stuff like that. Menu is constantly helping people figure out what gold is doing. I personally don't really trade gold, so it's amazing to have somebody in the group that loves gold as much as Menu does. And Philip is constantly posting charts and giving his analysis. And Ruth is an amazing, amazing Elliott wave trader, a forecaster. Stefan, and there's like a dozen people in the group that are constantly posting their charts and their trade ideas. I spent all my trading career in my mentor's group, and he retired a few years ago. And when he retired, I was like, I need to start my own group because not being in a group of like-minded traders is such it's so difficult to be a successful trader if you're not in a group of traders that are willing to help you out. Because I don't really care how long you've been trading, you're never going to get your hourly wave count correct. You're not always going to be correct. I am definitely not always correct about my hourly wave count. And when I'm not correct, it's really nice to have other people to fall back on, especially because other people bring different perspectives to the market. They will see things that I potentially don't see, maybe like some of these flat patterns and things like that. So definitely extremely, extremely beneficial in my opinion. And that's one of the reasons why I keep my membership so cheap. I only charge $30 a month. I'm not looking to get rich from my memberships. I have about 100 members making like $3,000 a month, but I pay my moderators two-thirds of that. So pretty much all the money I make from this membership goes to paying my two moderators to help me run the Discord group. So I make almost no money from this. I do it because I love the community aspect, and I do it because I love helping people, and I love being in a group of like-minded traders. So if anybody is interested, that's the purpose of this community is to help each other out. It's not a signal service. A lot of people think that I offer a signal service. I definitely, definitely, definitely do not offer a signal service. So, anyways, yeah, let's see. Does anybody else have any requests? The whole purpose of these live streams that I do every week is kind of requests. Last week, I think it was, we had FOMC, so last week, was more focused on the news. We got Trump talking in about an hour, but most likely he's not going to be on until quite a bit after this live stream is over because he's always so late. He's usually like at least 30 to 40 minutes late on every single speech that he does. I can look to see right now. Maybe he isn't going to be. No, they're talking about that cargo plane, that UPS cargo plane that went down. Let's see, Trump speech, and today is November 5th. Oh no, not 6th, November 5th. It's probably not even out yet. Yeah, it's not even out yet. Definitely something to keep an eye out for though is this Trump speech that's coming out. Especially if you're in any dollar trades, which I am in a dollar trade. I'm still long on the dollar yen, but I think I'm just gonna hold. I'll probably, if it's not to the 78% by the time I go to bed tonight, I'll probably move my stop loss to the 78% and then just go to my take profit to the 78% and then just go to sleep because I don't really want to take profit for no reason, just because it's a little bit of a pullback. One thing my mentor used to say is a pullback really shouldn't be something to fear. Anybody that goes long, every time they see a couple of candles go against them, they fear those candles. They're like, oh God, the market's turning. Which I do the same thing, but my mentor used to say a pullback shouldn't be something to fear. A pullback should potentially be an opportunity to add to a winning trade. The problem is when you're wrong, like let's say you went long again and you're already long here, and then it just goes down like that. This is going to be a loser, and then this is going to be a winner, which means that if you average them together, it's going to end up being like a break-even trade when it potentially could have been a really good profitable trade if you just would have entered once here and just held on. But I am a big believer that adding to winning trades is a really, really good strategy. The guy who wrote the Best Loser Wins book, um, Tom Higgards or whatever his name is, adds to his trades, and he's an amazing trader, definitely. And he said that most really successful traders do add to their winning trades. Retail traders add to losing trades. Very successful traders add to winning trades. That's one of the biggest difference between a retail trader and a very successful trader. A very successful trader will add to a winner. A retail trader will go sort here, and then if they're wrong, they'll go sort again, and then if they're wrong, they'll go sort again, and then they'll get stopped out with a huge loss. A really successful trader will go sort, and then if they're right, they'll go sort, and then if they're right, they'll go sort, and then 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 when they see a break of structure, they'll exit everything with a huge profit. And yes, I do realize that that is averaging down when it kind of goes against what a lot of people say you should do, but that's probably why 90 plus percent of traders don't make money is because they do things that they uh, a lot of things that I think are taught are things that are causing people to lose trades. I am a big believer that the risk to reward, I do believe risk to reward is extremely important, and I do understand that the math makes a lot of sense, but I think that so many people are chasing risk to reward ratios, which this is a risk to reward ratio chart right here. Everybody is using such a tight stop loss, trying to get those 3 to 1s, 4 to 1s, 5 to 1s, 10 to 1 trades, that they get stopped out of a trade 3, 4 times, and then they get frustrated and don't enter on the big winning trade because they're trying to chase these risk to reward ratios. I think the risk to reward ratio is actually what causes a lot of people to lose a lot of money because they're using such tight stop losses. They'll get in, have their stop loss like tight as they possibly can, and then the market will go down, stop you out, and then move up in your favor. Instead of giving the market a little bit of breathing room, maybe put it below the most recent swing. Yes, you're not going to get a big risk to reward ratio when you do that sometimes, but you're also not going to get stopped out of a trade that you were potentially right on. Oh wow, that Aussie dollar would have been a nice trade today. I wish I would have seen that actually. This is what I call a bread and butter trade. We were talking about these bread and butter trades in my Zoom meeting yesterday. These are the trades that I think put the bread and butter on the table. The market has been trending down, lower lows, lower highs, lower lows, lower highs. Then you get a break of structure. Then you get a pullback. That pullback entry right there is the safest entry you can find in the market. That is definitely the bread and butter trade right there. And then the same thing happened over here too. These are the trades that we should all be hunting for, in my opinion. Um, like right here, the market was trending down. And then it went into a sideways pattern, sideways, sideways, and then eventually it broke structure to the downside, and then it made a pullback. That right there is the bread and butter. That's where you sort of went short right there is after the break of structure, after the pullback, and then you would have made a huge profit. Same thing happened over here. The market was trending up, making higher highs, higher lows, higher highs, higher lows. It went down, it broke structure. You don't get in on the first move, you have patience. And then it pulled back. Then on that pullback, that is the bread and butter. The problem is that most people will go short and then they'll put their stop loss so damn tight that they get stopped out and then it goes in their favor. When the successful trader potentially will put their stop loss here or maybe close to there, and then they'll go short again there, then maybe short again there, and short and short and short, and then they'll exit everything here when you get a break of structure. So yeah, anyways, definitely put your request in the chats. I'll be more than happy to look at anything. I don't really mind looking at crypto or stock markets or indices or anything like that. People have been talking about Bitcoin. I haven't looked at Bitcoin in a while. I don't trade crypto, but I'm more than happy to always look at it. Hmm. That kind of looks like a WXY right there, doesn't it? Boy, that really does look like a WXY. 1, 2, 3 waves down, W. 1, 2, 3 waves up, X. One, two, three ways down. That could be a WXY right there. Bouncing from a pretty appropriate Fibonacci level. And probably on a sort of time frame, you'd want to see a break of structure. Yeah, yeah, kinda. I could consider that a bread and butter. I don't really like it too much because that's a little bit of a higher low, but definitely close enough, I think, for it to be a decent trade. You had a break of structure, then you had a sideways pullback, and then you had an engulfing move to the upside. That engulfing move to the upside would have been the bread and butter trade right there. Same thing over here. You had higher highs, higher lows, higher highs, higher lows, break of structure, pullback. That pullback after the break of structure would have been your bread and butter trade. That's what I'm doing from now on. I'm literally just looking for the bread and butter trades. And I'm not looking for them on the 1 hour time frame. I'm looking for them on like the 4 hour to 2 hour time frame. Especially because holiday season's right around the corner, and uh, I'm gonna be leaving Europe for about 6 weeks at the beginning of December. I'm going back to the United States for the holidays. And then next summer, I'm building a log cabin on a property that I own in the United States also. So I'm going to be traveling a lot this next couple years. And because of that, I do not want to be trading the sort of time frames. Yeah, let's take a look at the DAX, definitely. I literally spent 10 years, I say this all the time, and I feel like people don't really believe it. I literally spent 10 years trading with this on my chart. Actually, I won't lie, I had the 1 hour time frame for Strutza, but I literally spent 10 years trading like this. 4 hour time frame, 1 hour time frame. Once in a while, I would look at the 1 hour just to find some structure. Anything below the 4 hour time frame to me didn't really exist. I literally spent 10 years trading the 4 hour time frame and up. And I was able to turn a $1,200 trading account over the course of like 6 to 10 years into $100,000, which isn't crazy returns, but that is, if you think about it, that is definitely a really good return. With and I was able to have a full-time job at the same time, so you don't need to be on those super short time frames. One thing I'd never really understood is a lot of people have full-time jobs, they have families, they have jobs, wives, families, all these different things. And then they still think that they need to be on like the 15-minute or the 5-minute time frame trading. Like, how the hell can you justify watching that sort of a time frame when you are that busy with your life? How can you keep up with that sort of a time frame when you have that many things going on? When you have a job and you have children and you have a wife. If you have a job where you can sit on where you can watch the computer, like Menu has a job where he can watch gold on like the 5-minute, 3-minute time frame while he's at work every day. So he trades the sort of time frames, and I think that's amazing. I just think that many people do not have any. They do not. They should not be trading that sort of a time frame unless you are available to watch those short time frames. You have no business trading those short time frames. Oh man, look at that. I've been. I don't think I'm the only one. A lot of people are expecting a big drop on the DAX. I watched a video this week about why the German economy, well, not why, but why everybody's expecting the DAX to make a huge drop. Because what are the companies that make up the DAX too? Uh, some of the biggest companies in Germany are reporting some huge, huge losses right now. What companies make up the DAX? Software leader. I don't even. I thought it was all going to be car companies. Oh wow, it's not even car companies. I thought. Oh, okay. There's BMW. I was gonna say BMW, Mercedes, Porsche, and Volkswagen. I think Porsche reported like a $1.2 billion loss or something like that, or Mercedes did one of them. But actually, it's not even. I thought it was all car companies. It's not. There's engineering. There's a software company, telecoms, defense company, energy company, healthcare. So it's actually not just car companies like I thought it was. A lot of energy companies. There is a lot of car companies, but a lot of energy companies and engineering companies and stuff like that. Oh, Adidas. Adidas is a German company. I didn't know that. Hmm. Interesting. Looks like it's going back up to me. I have been, me and a few people in the group have been talking about how this definitely does look like it's ready to go down, but boy, until you get this break of structure right here, it's still in an uptrend. And it looks like it just made 5 waves up, one, two, 3 waves down. It's probably going to go back up and retest these highs. But definitely prepare yourself because at some point it probably is going to make a huge drop. Wow, that's very strong too. I wonder if that's a wave B though. Look how corrective that looks. That could be a wave B right there, couldn't it? That definitely could be a wave B. This could be a wave A right here. This could be your smaller wave A, which I'll change colors so you can kind of understand. This could go up and take out these highs, and that would be your ABC of B, and then it would go down and take out these lows like that for a C. So there's your A, there's your B, and there's your C. That probably is what it is, actually. This is probably just a final attempt to continue the uptrend, isn't it? Yeah, I would expect it to go up quite a bit more. Even if it's a wave B, I would expect it to take out these highs. If it really is continuing the uptrend, it might take out these highs too. So definitely still very bullish. That's what time did that move start? Boy, that was a beautiful entry right there, except for it didn't really break structure before. Man, that would have been a perfect entry. If there was like a little structure right here that it broke and then made a pullback, that would have been like such a perfect entry right there. It never did break structure until after the big move started. But yeah, definitely. I mean, if you were able to recognize that as a impulsive up, corrective sideways, and then engulfing up, that would have been a beautiful trade right there. Very nice trade for sure. If anybody has any requests, put them in the chats. Definitely. I mean, that's kind of the point of these live streams is so I can take requests from people. I had to make another cup of coffee. Been almost like tropical, tropical storms going on this week here. Very heavy rain. Makes you just want to stay home and chart, I guess. Don't really need to go outside in that bocap. I don't know. It might be leftovers from that storm that hit the Caribbeans. Maybe that's what this is that I'm getting over here in Europe. But boy, it's been raining hard this week, especially last night and this morning. Oh, the S&P 500 is pushing up. Nasdaq is pushing up again. So the U.S. government is now buying stocks, which is the first time I think in history they've ever been able to do that. Which I kind of think is a little bit of a manipulation, if you ask me, because obviously the U.S. government wants the stock market to just be a never-ending uptrend, which the stock market pretty much is a never-ending uptrend. The S&P 500, Nasdaq, and the Dow are basically never-ending uptrends. Anytime you see a pullback on the stock market, you need to assume that it very almost guaranteed is just a pullback within an uptrend. But the fact that the government is able to buy stocks to me seems like market manipulation because every single time it goes down, they're just gonna push it back up. And also, I think the whole reason why they're doing it is so that way they can reduce the debt. Because right now the U.S. debt is just out of control. So if the U.S. can manipulate the market and keep it going up, and then buy every single dip, they potentially could lower the debt ceiling dramatically over the next few years. So maybe that's what the plan is. I think that's what the plan is, at least. I don't really know if that's true or not, but that's definitely my theory behind it. This is the U.S. debt right here, $38 trillion. It goes up $100,000 every 2 or 3 seconds. Probably every 2 seconds it goes up $100,000. Trump wants to get this debt down at least a little bit over the next 3 years that he has in office. So maybe that's the plan with buying the stock market is to try to get the debt down a little bit. But We'll see if he's actually successful or not. They could do like what they did in the 30s and buy, make gold illegal and then confiscate everybody's gold and then peg the gold to $20 higher per ounce than it used to be or something like that, like they did in the 30s. That's how they reduced their debt after the Great Depression, was by confiscating everybody's gold. So this is probably pretty much what they're doing with the stock market. So, anyways, anybody have any requests? Definitely put them in the chats. We got Trump talking potentially in a little while, but more than likely he's going to be very late, like he always is. He's always, always, always late. So I'm not going to stick around for that, but I definitely will continue to take requests if anybody has anything to request. Definitely put in the chats. Supreme Court hearing on Trump's tariffs. Is that what's going on tonight? The Supreme Court hearing on Trump's tariffs? Supreme Court of the United States on Trump's tariffs. They just want to fight him every step of the way, don't they? I don't think any president in history has ever had to deal with as much bullcrap as that. Because gold has not broken the low. Oh, yeah. Let's take a look at gold. I actually haven't even looked at it this live stream, which is uncommon. I can't believe nobody has requested gold. Gold is like a fan favorite. Like, people love gold. And a lot of people request it. Let's see what you said. Broken the lows on the 1 hour and just started going up. Oh boy, it's so hard. I really like that analysis that you came up with yesterday, Menu, but it did break structure, didn't it, on the 1 hour? I like the analysis you came up with yesterday, and that's actually the analysis I used today in my morning video. So I hope you don't mind. But I pretty much, like I said, that's one of the reasons why I love being in a group so much, because I will sometimes hear something from somebody else and be like, "Oh, that person is like so right." The question is it over? Is the wave B already complete, or is it going to go down one more time and make like an expanding wave B before it goes up? I guess is the question, huh? It looks like it's already over. It looks like it should be going up, either three waves up to these highs or what. But I think gold has been, and I think gold is going to continue to be a little bit difficult, because I think this is going to be a complex pattern, and complex patterns are very difficult to forecast, because there's so many varieties of complex patterns. This is my Discord channel right here, and this is the educational tab. This is all information that I provide for my members. But if I scroll all the way up to the top, it's pretty much every single Elliott wave pattern is in here. Almost every single Elliott wave pattern that you can find is in this tab right here. But these ones up to the top are the complex patterns, like the ABCDEs, contracting, running, um, expanding, running, barrier triangles. It could make any one of these contracting triangles, 7 wave triangles, 9 wave triangles, WXY flat zigzag patterns. I mean, some of this stuff is very complicated. Like look at some of this stuff. Some of this stuff is very, very, very hard to forecast. And when you know that something is going to be a complex pattern, there's a lot of different patterns it could form. It could form any one of those patterns. And I think it is going to be a complex pattern, because the wave two was a very, very traditional pattern. It was a very traditional pullback. So I think this wave four is going to be either a triangle or like a WXY, or it's going to be a hard pattern to read along the way, in my opinion. But I think that we have 3 waves down for the A. I think that I agree with what Menu said yesterday, which is this is an AB. It's probably going to go up either 3 waves up or 5 waves up, like this, or maybe like this for wave C. And then there's your A, and there's your B, and then down for C. I mean, I still think that's the most likely scenario, but it could turn into so many different things at this point. One wave at a time, right, Menu? Jesus, that's the only way to go, I feel like, with gold right now. We had a break of structure right here. There's your pullback entry. That could have been your bread and butter trade right there today, actually. Yeah, that definitely could have been a nice little trade right there today. Yeah, stuff feels a little bit of a higher low, but break of structure. You could have gone long there, got out, gone long there, something like that. What time frame is that? That's the 1 hour time frame. Yeah, it broke structure on the 1 hour, but the only thing that really proves is that the way from here to here is over, right? And doesn't really prove anything besides that, does it? So I guess if it makes a lower high and makes it engulfing down, then it's probably going to go down and take out these lows right here. If it goes up and takes out this high, then we're probably looking at a wave C that will go up to at least 4,130 and maybe even a little higher than that. So we definitely do have a couple options for sure, but I guess right now the best thing to do is have your Fibonacci retracement from here to here. If it turns down and makes it golfing down at a fib level, then it's probably going to go down and take out these lows. If it doesn't turn down at a fib level, but instead goes up and breaks structure, then there's your break of structure pullback. There's your bread and butter right there to try to get long for the continuation of this move up. He's going to announce the name of the new Fed chairman, Andrew. Doesn't Powell still have some time left? I know that the Fed chairman is a 10-year term. I'm not really sure when his term is over. Is it over soon? Is it over next year? When is Powell's term up? May 2026. It is up soon. You're right, Andrew. Um, so yeah, you're probably right. May 2026, which is next spring, Powell's 10-year term is over. So that means that he's been in there for, yeah. I know, huh? I wonder who he's gonna, because Trump is the one that got Powell in the office in the first place. During the first administration, Powell was elected by Trump, or whatever, announced by Trump, or whatever they call it. That's kind of funny that Trump is going to be the person who announces both the Fed chair members, the Fed chairman last time and this time. Just like a normal Trump speech, he's probably going to spend most of the speech talking about how great he is and how wonderful he is and how great the economy is and how he's the best president that ever lived and there's never been a better president than him. And that's probably what most of his speech is going to be because that's what most of his speeches are. I, I am definitely a Republican. I've always been a Republican, but I do not agree with everything that the Republicans do, and I definitely don't agree with everything that the Democrats do. So I'm kind of in the middle. I almost always vote Republican because I am an American, even though I live in Europe. I do vote. I usually do an absentee ballot, so I almost always do vote Republican. But I definitely do not agree with all the stuff that Trump does. I definitely don't agree with all the stuff that Democrats do. So kind of in the middle. I try to stay out of the drama that goes on in the U.S. right now because boy, it is awful dramaful over there right now. Oh man, so I just take profit on that stupid dollar yen. I think I'm just gonna hold. Maybe I'll just move my stop loss. I really don't want to exit a good trade. I've done that too many times. I'm gonna move my stop loss close to my entry. Probably put it right there. Worst case scenario, I lose like coffee money. Best case scenario, I get my 2-to-1 risk to reward, and I'm happy. Yeah, that 2-to-1 is still quite a ways away though. And then the Aussie Swiss. How close am I at to take profit on that baby? Still quite a ways probably. Yeah, that one's got a ways to go. I can move my stop loss below the wave 1 or the wave C, whatever it potentially is. I really, really hate making a trading decision just based on the fact that a candle is pulling back a little bit. Because that right there looks like a pullback candle. And then what happened? The next candle is like bullish as hell. Yeah, this is definitely a pullback candle, but how do we know the next candle is not going to suit up and hit the 78%? I do agree that the euro dollar really looks like it's due for a pullback. It's made a double bottom right at the 100% Fibonacci extension. The pound dollar also looks like it's due for a pullback, and the pound dollar has a perfect 5 waves on the 1 hour time frame. One, two, three, four, five. Normally, the market will make 5 waves and then pull back, and then make 5 waves and then pull back. Just like this picture that I love to show my group because it is such a good representation of how the market really works. The market will make 5 waves and then pull back, and then it'll make 5 waves and then pull back, and then 5 waves and then a bigger pullback, and then 5 waves and a pullback, and then 5 waves pull back. So it'll just continuously make 5 waves, pull back, 5 waves, pull back. And holding on to trades for as long as I normally prefer to hold on to trades has definitely been a little bit of a struggle this year because the markets have definitely not been trending as much as they have over the several years before this year. Normally I would enter a trade on the 4 hour time frame and I would hold on to it for a week, sometimes 2 weeks, and not even really care. But the markets have been a little tough for that type of trading. Honestly, over the last several weeks, it really wasn't bad. Like you could have gone short on the pound dollar last week and still be short right now, looking for an exit. You could have gone short on the pound dollar last week and still be short, looking for an exit. You could have went short on the Aussie dollar, that breaker structure down, and then and probably got out today. I would have probably exited today with that breaker structure, but that definitely could have been a good swing trade. Kiwi dollar would have been a very, very, very good trade. I normally don't like the Kiwi pairs, but boy, once in a while they make some really good entries. And this is what I was talking about yesterday in my Zoom meeting. This is the bread and butter. Breaker structure, pull back, enter short, and then just go low, high, 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 low, high. Oh, breaker structure. Okay, I'll get out. Go short here, get out here. Hold on to it for 1, 2, 3, 4, maybe 5 days, and get out. Those are the trades I would much prefer to do. I absolutely hate trading the 5 minute or the 1 minute or the 15 minute or the 30 minute. I don't even like trading the 1 hour time frame. A guy I used to trade with in my old group, his name was Damien, and he was from the UK, and he was an amazing trader. He did really, really, really well, but he had really, really good. His trading psychology was amazing. Like he could get in a trade, and he would not exit that trade until there was a reason to get out, like a break of structure or like if he was short, he would get out on a higher low, or if he was long, he would get out on a lower high, or he would get out on a break of structure. But he used to always say that the 1 hour time frame is so manipulated, and anything below the 1 hour time frame is very, very manipulated. So what he did is he would trade the 2 hour time frame, which makes a big difference with work-life balance. You can literally check your charts every 2 hours. Even if you have a full-time job, you can still check your charts every 2 hours if you have a fairly normal job. You know, And then same thing, you got the break of structure, then pull back, and then there's your engulfing down. You go short there, put your stop loss there. Low, high, low, high, low, high, low, high, low, high, low, high, low, high. Right now, you got a higher low, so you probably would have got out right there. You would have gone short here. You would have got out right there with like probably about a 6 to 1 risk to reward ratio on the 2 hour time frame. Hold on to this trade for almost a week and do literally nothing. That's why I love swing trading because you literally will get in a trade and then you'll do nothing. And then you can do all the things that you enjoy doing, like spending time with family, exercising, or whatever you may be doing. You just keep on doing it over and over and over. So, anyways, yeah. So, anyways, 6 o'clock. Is that Trump thing actually going to start or what? Hmm. I don't even know if this is it. The Supreme Court hearing. I don't think that's what's going on. Hmm. I guess it is the Supreme Court hearing that's going on today. Yeah, well, definitely keep an eye on that. That's probably going to be potentially pretty important. So keep an eye on your charts over the next hour and a half. Yeah, I do agree. The market, I don't know if they've been unpredictable, but they've been choppy. And a choppy market is hard for swing trading, especially if you're talking about the dollar. You you have to realize the dollar has kind of been in a range ever since basically April this year. Pretty much this whole sideways, this is all sideways in my opinion. So it definitely, that's why I think it's been a little bit more difficult to swing trade this year, at least on the dollar pairs, definitely. But it is definitely possible. I mean, there's definitely some really good swing trades still. Just a little bit more difficult, I think. But it's not like the markets are any different than they have been. They just, if you look back, you'll find probably at some point way back in the past, there was probably markets exactly like what we got going on now. Probably very, very choppy markets at some point. Maybe, prior to 2008, before the big housing crash, the markets are probably pretty choppy. Usually the markets predict the future. So a choppy, if you think about the Wyckoff theory, a choppy market is usually accumulation. That's the accumulation period. So accumulation is eventually going to lead to distribution. So if you look back at the charts, prior to 2008, before the housing crash, you're probably going to see a pretty choppy market, I would imagine. You can't even go back that far on the US dollar index. There's 2008 right there. So it really wasn't that bad, I guess. But this is prior to 2008. I mean, it was definitely pretty sideways for a while. And then bam, 2008, and then huge down, huge up, huge down, huge up, and then eventually started a big old trend. So if you think about it in the old Wyckoff theory, we're probably accumulating positions for something. Maybe another sword on the DXY at some point. That would be my prediction. Probably gonna go up, grab liquidity, and then probably bam, back down hard, real hard. So anyways, definitely make sure you like and subscribe to my channel. Definitely check out my website if anybody's interested in joining my membership. It is extremely cheap. I do these live streams every Wednesday, so definitely make sure you like and subscribe so that way you don't miss out on my future live streams. And I do a Zoom meeting every Tuesday at 5 p.m. UK time, and then at noon on Friday I do another Zoom meeting. On Tuesday, it's more about teaching. On Friday, usually there's some sort of news that we're trading together, or at least watching together. And yeah, like I said, it's not a signal service, but I do really appreciate the people that join the group and share their charts. That's kind of what I was dreaming this community to be the whole time, was a community of like-minded traders that are willing to help each other out, post their charts, and help each other out. So definitely, if that's what you're looking for, definitely check it out. It's extremely cheap. And I do share all my trades with the group at the time of entry. Like I said, I shared the two trades that I'm currently in. I'm currently long the US dollar yen, which I got in. And I'm also, yesterday I got in that. And I'm also long the US dollar Swiss, the Aussie Swiss. Probably would have been a good idea to get out of the dollar yen, but boy, I just really feel like it might not be quite over. But it could keep on going down, honestly. And if it does, it does. It didn't get my target, but that's okay. Worst case scenario, it goes back down to break even. Best case scenario, I go to bed tonight and I wake up tomorrow and with a take profit hit. So, anyways, yeah, like I said, definitely like and subscribe. I'll see you guys next Wednesday, unless you're a member. If you're a member, I'll see you on Friday. And as always, thank you for watching and happy trading, everyone.